Might take a while. Doug Flynn is with us, certified financial planner, co-founder of Flynn Zito Capital Management. That's my translation, at least. It takes Jay Powell a lot longer to say that, but that's the, I guess the general idea is that no soft landing, at least not yet. Rate cuts, you know, they'll come down at some point this year, but it might take a while. What did you think of what he said?
Yes, he basically came out in his press conference after the initial marks and said, hey, a March cut is off the table. And so that you can almost look at the market during the day. It's right after he said that the market sold off because there was a greater than 50% expectation that cuts were going to happen as soon as March. And, you know, maybe now it's May or June, but and that's still okay. They're going to come is what he's saying. And they took some restrictive language out and said, we're not going to be raising, which was good, but we're just not getting the clarity on just when they're going to start lowering.
All right, so lower interest rates are coming. We don't know when. Market's not a big fan of uncertainty, and if you push it out a little bit, it goes lower. I want to talk about Tesla for a moment as well, because we had a headline I mentioned briefly before our last commercial break that there are a number of counties in California suing Tesla because of hazardous waste, but we also see Elon Musk's pay is in the news. His $56 billion pay package was struck down by a judge, which kind of took me a little bit off guard. I didn't think that was going to happen. I'm sure he didn't either. But now, what about that, plus this lawsuit that the company's apparently facing?
I mean, if starting with the lawsuit for a second, I mean, anytime if you are mishandling hazardous waste, you know, that's got to be dealt with. That's terrible. My office is right by Roosevelt Field, which is where Charles Lindbergh took off. And they dumped tons of stuff here on the island. And, you know, maybe that's connected to some breast cancer that's much higher in this part of the country. So, hey, listen, attack that, deal with it properly, find them, make them do it properly. I think that's the way that'll go. I don't think it's going to have an impact on the stock price, but it needs to be dealt with. As far as the bonus pay package, it needs to be put in context. Now, the judge wanted the board to negotiate more aggressively against Elon with a smaller pay package. But if you go back to 2018, when these stock options were issued, the company was in its entirety worth about $50 billion. Huh. At the end of this, when it kicked out, it was worth $800 billion. So let me put it like this: if Connell, if I said, hey, give me $50. Right. And in 5 years, if I can turn that into 800, would you give me 50 of that? Right. And most people would sign up for that. That's what this is. And most people aren't going to have a situation where they're able to take a company and magnify it 15 times. And if they do, maybe you take one of those. That's why the numbers seem extreme, but that growth was unlike what we've ever seen. And that's how that is. I think it's a really good explanation, because it's easy to say, oh, this guy's getting cut a check for $50 billion, and it's worth explaining, and you just did very well. Now, Doug's a Yankees fan, so I'm going to end on this news today, because this is financial news. The Baltimore Orioles are being sold to a couple billionaires. David Rubenstein of the Carlyle Group fame is one of them. So I suppose this means that Baltimore will now challenge your Yankees for all the free agents now that they have these rich folks owning the team. They've definitely been getting better, and if they do this, it could make the difference, no question. You know, look, this is pretty brilliant. There's about a 40% sale going on now to the guys that ran Carlyle, which is a private equity firm. And what they structured it is that the other 60%, they're not going to take over until Peter Angelos passes away. And what that means is that $1 billion of that final part of the sale doesn't have to pay capital gains tax while they're alive, because they're going to get it through his death. So it's pretty smart in how they're doing it, but they would get the control. Now, just flipping over to the values for a second, 31 years ago when they bought it, it was about a tenth of the value. So if you do that math, it went up tenfold from 31 years ago. And so, you know, you take 170 million and turn it to 1.7 billion, and you say, oh, that sounds great. And then you do the math, and that's less than 8% a year. So we get back to these deals. They sound amazing, but in reality, you're getting maybe 2% less than you might get in the market, which, by the way, having put 170 million in the market 31 years ago, you'd probably have about 3 billion instead of 1.7, but you wouldn't have owned a team. So it's another interesting point that when you see just broad numbers or big numbers, you sometimes don't put them in the right context, but Doug did, and even as a Yankee fan. So thank you for that, and good to see you as always. Doug Flynn on all our business headlines.